We are still working on exercise 3-12. We already did the worksheet. And now we need to do the financial statements. Okay, so the financial statements are already set up, so it should be relatively easy. So we just have to go back and forth. So our sales were $45,000. Cost of goods sold is 21. All right, and it put the minus because they want it to, they put the asterisk because they want it to be a negative number. And then you can just add them together because it's already a negative number and get your gross profit. All right, salaries were 500. No. Salaries were 7,600. Utilities are 3,300. Advertising is 4,400. Depreciation is 3,000. Bad debt expense is 450. Wait, 450, and then rent is 1,200. And then sum it up. Oh, once again, they want a negative in front of it. And then you're going to do your gross profit minus the 19.5. I put a plus sign because it's a negative number. So, all right, so there's my income from operations. That does not look correct. Then interest expense should be 400. And my income tax expense should be 1,460. And my net income is 2,190. Oh, net income is 2,190. Okay. It should tie to this number, so we're okay. All right, and then for earnings per share, since we're a corporation, we have to calculate earnings per share, and it's your net income divided by 1,000 shares. All right, then we have to do our statement of retained earnings. All right, the beginning retained earnings are the ones that are up here at the top, so 10,200. Net income comes from the income statement, so 2,190. And you can subtotal. Dividends are $1,000. And then add those up to get your new retained earnings. And it should tie to what you have up here for retained earnings. So 11,390 and 11,390. All right, then the lovely balance sheets. We're going to have to do a lot of scrolling. I'm really sorry. All right, so we need cash, accounts receivable, allowance. So 24,400 and 750. 2,400. 4,000 minus 750. Obviously, I copied cash wrong. I'll check that in a minute. Remember, allowance for doubtful accounts is a contra asset, so you subtract. All right, so we need inventory and prepaid rent. Cash is 25. 82 and 24. 25, 82, and 24. And you could, if you wanted to, put little formulas in here. All right, what I mean by that, I could say equipment is equal and the number for equipment up here. I could do it that way. To me, that takes a little longer. And then accumulated depreciation is going to be 15. And it's probably going to tell me that it's wrong because it wants a negative sign. And then we're going to do the 30 plus the negative 15. Remember, accumulated depreciation is a contrasted account. Then I'm going to add up my current assets and my total plant and equipment. All right, accounts payable. $37 and then 5. Salaries payable is 500. Interest payable is 400. And income tax payable is $14.60. Please excuse the children yelling in the bathroom. In the background, sorry. They're not in the bathroom. They go back to school on Tuesday. Yay! Alright, so then our common stock is 8,900. Retained earnings is what we got on our statement of retained earnings, so 11,390. So I add those two up. And then I add my equity plus my liabilities. And it should balance out, and it does. The next thing we have to do are the closing entries. Okay, so there are 4 closing entries that need to be done. Generally, the first closing entry is to close out revenue. All right, so if you look back up here, income statement, or you can go to the worksheet. I'm going to go right here. Revenue was $45,000. Revenue normally has a credit balance. So if I want to close it out, I have to debit the revenue account. Sorry. And then my credit will be to income summary. Oh, look, it has a little tab in there. All right, expenses normally have debit balances, so if I need to close those, I have to credit the expense accounts and debit the income summary. All right, so I don't know the total of that yet. I have to put all my expenses in. I'm going to go with my income statement. It's easier. So I have salaries, utilities, and advertising. And salaries, utilities, advertising, depreciation, rent, and bad debt. Okay, let's go find some of the numbers. So 76, 33, and 44. 76, 33, and 44. Why do those have little asterisks by them? Do they want me to go like to refer to that? So equal I-26. I don't know why that's wrong. Those aren't wrong. I'm leaving them. Depreciation is $3,000, $1,200, and $450. All right, then you sum those up. Okay, so they should equal the $19,950, and they do. So now in income summary, you basically have net income. You have the $45,000 minus the $19,950, which equals net income. All right, so we had net income. So now the income summary has a credit balance. We credit it for $45 and we debit it for $19,950. So we have a credit balance that we have to close out. So I'm going to debit income summary, and I'm going to close it out to retained earnings. All right, and I'm going to subtract it, but it should equal the net income number that you have on, what is that? That you have on your income statement. I'm so confused. $45. $45,000 minus $19,950 does not equal that. Yeah, it does equal that. It does not equal that. Oh, I know why. Because what did I forget? I forgot cost of goods sold. And you know what? That's why they don't like this stuff here, because they want cost of goods sold to go first. And you know what else I forgot was income tax. So cost of goods sold was $21,000, and income tax is $1,460. All right. I don't know why that's not equaling right. Okay, this I need to fix. So this is a sum. I can't see where I am. All of these guys. There. $25.90. Is that the right answer? No, I'm $400 off. Oh, interest expense. So I know I'm off because my net income does not equal what it should. There. And it's got the asterisks here and telling me I'm wrong because I don't have them in the order that they want them in, because I inserted this, I moved this stuff down and it messed it all up. I have no idea what the double number sign means. But anyway, so there's $21.90 on the credit side, which makes sense. We had net income, so retained earnings should be going up, and you increase retained earnings with a credit. All right, then the last thing we have to do is close out drawing, and it is debited. Retained earnings is debited. For the amount of dividends, and I can look up here at my statement of retained earnings. They were $1,000. And dividends is credited. And that's it. You should have 4 entries. What you debit and credit to income summary over and retained earnings over here should tie the income statement. And remember that it's not lucky by numbers because it's not in the spots where they think they should be, but the entry is correct.